Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for June 18th, 2012. This is Patrick Ceresna. As always, we start off with the chart of the S&P 500 using that spider exchange rate fund symbol SPY. While we saw that short-term bottom banged out the other week, we have now seen the markets working their way back higher to what's now the 134 to 135 focal point. This is a level of interest and significance because so far we've seen a rally that just classifies as a natural retracement. This is obviously coming on the weekend when there's a catalyst such as the Greek elections coming in, which could certainly stimulate the markets one direction or another very rapidly. But if this was just to be a normal retracement, irrespective of the results, the markets should find it difficult to be able to exceed this 135 to 137 level on the upside before there would be a subsequent reversal for another wave of selling into the summer. If the outcome in the Eurozone is relatively bullish and the markets really grab hold of it and take it higher, then we could see even a double top retest of the 140, 142. While certainly we won't rule that out, our first suspicion is to watch this retracement zone drawn out here for all the major rejections going into summer. At this stage, there's no reason not to believe that the month of July should bring another round of selling, so it's just a matter of seeing how the next couple weeks bang out before another substantial move could develop. Next here I want to take a look at the ISE Global Copper Index, which is symbol ISC, and copper has substantially sold off all the way back to its October lows around that 280 to 300 level on the downside. We've now seen a pattern that looks very similar to like an inverted head and shoulders, and subsequently there's room for now the Global Copper Index to try to retrace a bit. Retracements could easily go even as high as 330 to 350. We don't necessarily believe that that it has to go that high. We could see rejections right in these zones of 310 to 320. But the bottom line is that we don't believe that this will be the beginning of a new bull market in global copper index, but rather simply a much needed bounce off of a very oversold market. And so while we're looking for the next week or two to potentially bring in some further strength, we don't believe that it will be sustainable in the bigger picture. Next year, when we take a look at the ISE Global Engineering and Construction Index, we see a very similar characteristic to that of the copper index. Not only did we retest those October and November lows, but it created almost like a little inverted head and shoulders pattern that is attempting to turn bullish. In a similar fashion, it is likely that all rallies are going to be contained on this index to the 225 to 230 focal point that we drew up. But it doesn't even mean that the market has to make it that high. While we're not opposed to the next week or two having strength in these indices, we remain relatively skeptical of the sustainability of it. So if you are able to participate in a 10 to 15 point rally on the upside of the engineering index up to that zone, it probably will be an opportunity to move to the sideline on this index. Finally, I want to take a look at the ISE Cloud Computing Index, which is symbol CPQ. This is a chart of the ETF of the SKYY, which trades based on that, and we more or less have seen a very similar pattern again. While we never had a direct test of the November-December lows, we have seen obviously a very deep correction in this index. Now that is trying to develop a short-term bottom, there is room for this cloud computing index to to rally even up to the 19 to even as high as a $20 level on the upside during a short-term period of strength. But the theme is pretty consistent among all of our perspectives, whether it's the S&P 500, whether we're talking copper, engineering, or computer, cloud computing. The bottom line is we're looking for these rallies to last no more than a few more weeks. They certainly have room to push to higher levels, but we're looking for all of these rallies to at some point fail going into July. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.